PayPal was once considered a high-flying stock and darling of Wall Street. Shares skyrocketed over 400% from 2017 to 2021 as revenue and earnings rapidly grew. But 2022 brought a rude awakening. After peaking above $300 in 2021, PayPal stock came crashing down, plummeting over 70% amidst growth concerns, executive departures, and stiffening competition. Now trading under $60 per share and boasting a price-to-earnings ratio of just 18, PayPal looks like a radically different company. The stock chart shows a towering peak utterly collapsed, but with shares massively discounted from 2021 highs, many investors are wondering, could 2023 be the year of a PayPal comeback? To understand PayPal's potential resurgence, we must first diagnose what doomed its incredible run. PayPal disappointed Wall Street in early 2022 by delivering underwhelming growth targets, expecting just 15–17% revenue growth compared to previous years of over 20%. This sparked worries that PayPal was losing steam right as nimble fintech rivals like Square were accelerating. High-profile executive exits like COO Bill Reddy in June further unsettled investors. And the hawkish Fed tanking tech valuations piled on pain. But negativity around PayPal now seems overblown. While growth is slowing, its core payments business remains sturdy with 34 million merchants and over 430 million active accounts. It retains leadership in fast-growing segments like buy now, pay later, and trading at just 18 times earnings, PayPal stock arguably bakes in most bad news already. For long-term investors, this humbled fintech giant could offer turnaround value. While PayPal faces real near-term challenges, predictions of its demise seem premature. This fintech pioneer retains key strengths and a long runway for growth in digital payments. PayPal still boasts over 430 million active accounts globally, a massive customer base dwarfing most payment providers, and it continues gaining roughly 50 million net new active accounts annually. PayPal also processes over $1.2 trillion in total payment volume, capturing scale most competitors cannot match. These network effects and two-sided platform advantages persist despite recent stumbles. PayPal further holds leadership in key growth areas like peer-to-peer payments through Venmo and buy now, pay later financing, which is exploding. The total addressable market for digital payments and financial services remains enormous at over $110 trillion. Thus, even modest market share gains can drive big revenue for PayPal, and PayPal is responding to competitive and macro threats. New CEO Dan Schulman vows to boost innovation and execution. Management is cutting costs by $900 million to re-accelerate margin expansion. The company also announced new revenue streams in crypto and cross-border remittances. While economic uncertainty has tempered growth expectations near-term, PayPal still increased Q3 2022 revenues by 12% year-over-year. Its core business model also shines during hard times when consumers especially value flexible financing options. Overall, obituaries for PayPal seem premature. This innovative company still dominates key segments of digital payments while trading at historic valuation lows. For long-term investors, PayPal stock could offer turnaround value if execution improves under new leadership. Given PayPal's still massive user base, leadership in key segments, and reasonable valuation, what factors could catalyze a stock rebound in 2023? One potential upside catalyst is improved execution under new CEO Dan Schulman. Investors hope fresh leadership can reinvigorate innovation, sharpen PayPal's competitive edge, and deliver better-than-feared growth results. Even modest upside surprises could boost battered sentiment. Partnerships also offer big potential. PayPal is expanding relationships with payment networks like Visa to boost checkout conversion rates. It partners with major e-commerce players like Amazon to expand merchant acceptance, and new agreements with Apple, Google, and Samsung leverage these mobile ecosystems to drive user growth. International expansion similarly provides a huge runway. PayPal currently generates over 50% of revenue outside the US. It is investing heavily in underpenetrated markets like India, China, Brazil, and across Southeast Asia where digital payments are booming. Capturing just fractional share here may yield big user and payment volume gains. And PayPal continues rolling out new products like cryptocurrency trading, savings accounts, and stock trading that leverage its trusted brand with consumers. If even moderately successful, these offerings bring significant revenue opportunities beyond core payments. Macroeconomic forces will also likely benefit PayPal. Once the Fed pivots from interest rate hikes, investors may rotate back into beaten-down but profitable tech and fintech stocks. And possible U.S. recession could perversely boost PayPal's buy now, pay later services. Overall, PayPal retains ingredients for a potential turnaround. And with over 70% of losses already baked in, just modest upside could ignite a rally. For risk-tolerant investors, the time to buy may be now before sentiment shifts.